Hello traders, hope you're having a wonderful weekend so far. Hope you've had a wonderful weekend. It's on Sunday the 14th. I'm just looking past our trades since we started trading on this channel back in May with you guys. So you can get to see May 17th. So far we have like 9,000 closed trades so far, May 26th. And it goes all the way till June. All the way till June. We have also July. See, we're here 9,000 trades. Crazy, right? After a period of 3 months. We're the third month, right? Yeah. So apart from that, let's go and see how trading has been this past week. So on open trades, I have trades here. We have doubled our profit from the last time I was here with you guys. Remember last time we were at around 1.9, now we're at around 3.6. If you add all of this, we get to see I'm still holding some trades from last month. Added more positions on gold on July 10th, before CPI, right? Yeah, it was before CPI, it was on Thursday, right? Added more positions on gold, and I'll tell you why, and I'll tell you why my bias was bullish. And I'll give you a secret. If you stay until the end of the video, I'll give you every video I'll be giving you a tiny secret about ICT and how to know the bias of the news. I don't know. I'll show you. I know, controversial, right? But you'll see it. Then I added I had a very good trade on Audi JPY. It's a new trade I added. I have both sells and buys, but the buys outweigh the sells. That's why it just shows buy. But if we are to look at it, the sells outweigh the buy. That's why. So I'll show you the sell positions and my very, let's say, perfect entry on this pair. So let's check news. Let's see what we have this week. This week, guys, we'll be having it's a relatively calm week, but we'll be having unemployment change, unemployment rate, and on Thursday, which I'm waiting for, we'll be having unemployment claims, red folder news. So here are the previous, here are the forecast. So we'll wait on the actual figures. On Monday, I don't think I'll be trading because we have GPY bank holiday. But let's find days where bank holidays are, markets are less volatile. So we can just wait till Tuesday. But if there's an opportunity that will present itself on Monday, I'll definitely take the trade. So let's dive into the charts, guys. So let's start with DXY. Remember, DXY helps us have a bias or have a better picture of what other pairs will do. Because remember, most pairs I trade are dollar pairs. So like gold, EurUsd, Great British Pound USD, they're all paired together. So you have to understand they're inversely related. For new traders, let me explain this to you. When the dollar is going up, what do you think other pairs paired to the dollar are doing? They're going down, okay? It's an inverse relationship. So dollar going up, you'll find gold going down, EurUsd going down, Great British Pound going down, okay? So if let's say this week we have been selling. Since last week I gave you the analysis, we were short on DXY. So I told you guys we'll be doing the opposite for gold, EurUsd, Great British Pound USD, will be buying. So if dollar is going down, inversely related will be buying, okay? So let's dive into it. Let's see. So far, these few months we have been trading, we have actually, my analysis has actually been 100% for the last 4 weeks on dollar. Every move I've called happened. We started this on the daily time frame. So we started with this move here, sell. Told you to sell. Because remember, market just moves from, you know, once we have grabbed buy side, we target sell side. Once sell side, we target buy side, okay? But you have to have a narrative and, you know, confluences behind it. You just don't aim recklessly or carelessly, okay? So Last week I told you guys, after we had taken out this buy side liquidity here, we get to see, I told you guys now we target the sell side liquidity. And where is the sell side liquidity? We had this low, and now we are almost reaching this low, which that's the low I was targeting last video. And last week we were somewhere here, right? This was on Friday. We closed the market here. I told you guys prices might retrace to this daily fair value gap and then push to the downside, but due to CPI and the PPI news last week, we got to see markets dropped very fast and made very huge moves, because the targets we had for both news events, mostly the CPI, didn't come out the way we want. Actually, I think it came out more, or so it was more than what we expected. That's what I mean. So we had huge moves, and that's why you see. But end of the day, you have to realize something. All these things are either priced in, or I feel like the algorithm knows for some reason that news will be going this direction, and you'll find it will align. Actually, I told you last week we have to target this sell side, and news had to come in favor of that. So I don't want to get controversial here for new traders. Let's just stick to, you trade what you see, okay? Not what you believe, or but it's good to form your own narratives and ideas. But though they might be controversial to others, just keep them to yourself at times, okay? So let's go drop down to the 2-hour time frame and explain what I'll be looking at this week. So this week we've already grabbed this sell side liquidity, so the only thing remaining is grabbing this last sell side liquidity over here. So this week I expect maybe we grab that, or prices might move higher into this daily fair value gap and push lower. But remember, let's move back to the daily time frame. You see here we have a demand area, so be wary of that demand area, because we get to see it has held price for quite some time. Get to see once there, twice here, thrice here, 4 times, 5 times here, 6 times there, 7 times we're here. So this area is quite a strong area, so caution. So we might either see a move to the downside, to the upside. But if it's to the upside, of which I believe after such a strong move, at least we should have some upside move back to either this daily fair value gap, then we can push lower. So yeah, we'll see how it will play out. Remember, we trade what we see, so let's wait for markets to start printing on Monday so that we have a clear bias. Let's move to, which pair can I move to? Let's move to EurUsd. Let's see how EurUsd. Remember, I'll overlay the trades on each of this pair just right here on the screen, so you can keep an eye on that. So on EurUsd, we get to see prices are moving in our direction. I told you guys last week we were here. Told you guys we'll reach this buy side liquidity, and we're just here. So DXY is almost reaching the sell side, EurUsd is almost reaching the buy side. Remember, inverse relationship. And then after maybe targeting this, we can target this long-term buy side liquidity up here. So let's move to the 2-hour time frame. Let's see what's happening. So last week, guys, we closed the market on this candle. I told you guys, you see this arrow, I told you guys expect market to push down come Monday open, and I told you guys expect huge gaps in the market because we had Euro news last weekend on Sunday. So I told you guys it was a red folder news, so I told you expect gaps, and that's here's on the 2-hour. If we move to the lower time frame, we'll see it. So there's a huge gap which pushed price here, gap down, prices retraced back up, filled the gap. You get to see, filled the gap, and then we had this accumulation, manipulation. We had this order block here holding price, and prices didn't necessarily come back to this fair value gap, but that's why you keep your analysis, you know, you keep on analyzing the market. We get to see after the accumulation, manipulation, we had this order block here, this down close candle supporting price. Once price pushed above, we get to see prices were respecting that order block, and we continued pushing to the upside. Okay, so same thing, this was a classic buy profile for the week on EurUsd. Same case we got to see last time. We had a gap up, markets had to come down, fill the gap. So it's just the same thing here. We had a gap down, markets had to come, fill the inefficiency. Remember, markets try to fill inefficiencies. Okay, that's why we target fair value gaps and cause imbalances, because they're all inefficiencies in the market, and the market tends to fill the inefficiency before pushing to the upside. So yeah, so same pattern we had last week. Accumulation here, manipulation, sell side liquidity was taken, pushed to the upside, distribution. Same setup we see this week. Accumulation, manipulation, sell side liquidity was swept, order block supported price, and we moved to the upside, and we are close to reaching this buy side liquidity. So what do we expect this week? This week I expect maybe a push to the upside, taking this drawn liquidity, prices retracing back down, maybe to this daily fair value gap, before we target the other high, the long term buy side liquidity. Okay, that will be my analysis on EurUsd. So far so good. I'm still holding on the trades. I'll overlay them here on the side. I'm still holding the trades. I thought when prices come down here, I'll add more positions. I would have added more positions here. I don't know why I didn't add positions. Maybe because I was cautious about news on EurUsd, but I didn't add positions. But market just went according to our analysis, so proud on that. So we're just almost reaching our targets. Now let's go to Great British Pound USD. Remember, it's doing the same thing. Okay, so same thing I told you guys. Prices was remember, we have analyzed this pair. I broke it down for you in a simple way last week. Told you guys this area will support price, and price will target also buy side liquidity. So we have targeted the first one, already hit. The second buy side already hit. So what do we expect? Maybe a retrace to the downside somewhere. Let me hide my analysis. Yeah, so maybe we expect a retrace to the downside a bit, then push to the upside, targeting a higher buy side liquidity area, of which there is a higher area. If you look, I think on the weekly or on the daily time frame, can just show you guys. Let me zoom out. It's one of these highs on this side. Yeah, it's this one, this area, 31,406, 31,431, that area. So yeah, we can target that, and I got a very good entry. Let's move to the 5-minute time frame. So I told you guys I'll be giving gems, you know, dropping gems every trading analysis. I'll try, and here's one very good ICT, and I don't think you'll get this anywhere else. So here's the analysis. Okay, so let me remove this so that you can understand. So this represents my cycle. Each area here represent my cycles, and I treat these cycles as Monday, Tuesday, Wednesday, like Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, that's how I treat those cycles. So I start with my Asian session. We had okay, I won't go in depth into that, but let me just tell you, we have the DTCC. You know it as the Depository Trust and Clearing Corporation, right? So the high, the mid, and the low of the DTCC acts as dynamic support and resistance. We get to see here the midpoint acted as a resistance. Okay, once price pushed above, it became support. So those are the things you look at. The high, we never got a retrace to test if it's but you get my point. Okay, so on these cycles, this is what I look at. On the Asian session, we had an order block here, down close candle, supported price there, and then supported price here. But how do we just enter this, how do we guarantee that this order block is high probability? I'm going to introduce you to something new you might have never heard. Let's come here. Here. Fib time zones. So for my cycles, from the first cycle from 2 to 3:30, and remember MOP is midnight opening price, so it's at exactly at 00 here. Get to see the time, the opening price there. So I'll break this strategy in the future, but stay with me right now. So between when you take this time-based fib and put it out, and if you set it according to the values I've set here, it works like the same fib the way you see you target the 0.6, 0.7 retrace area for retracement, right? So this one works on time. So if your PD or anything falls between the 0.47 and 0.67 area, it's high probability, and 9 out of 10 times it will hold price. So my order block fell within that area, and you get to see the wicked into the order block at this exact period, and we get to see what happened after that. Prices just moved up. So you can always target the low here. My stop loss at the low here, entry exactly at that specific time, which is 2:40. And remember, this acts as a New York kill zone. It acts like it, okay? And we just had a push to the upside. So I'll show you this trade again, similar on Audi JPY and how I caught it before news. So continue. We had a fair value gap, of which prices, this is the PPI news. This huge wick you're seeing here is the PPI news. Then here we had an order block, and prices continued going higher, and prices ended up somewhere there and closed there for the week. I'll come explain that later in another future video. Very good concept. I wish. Can I just dive into it? It's also on Audi JPY, and I'll show you the trade I caught. This was the CPI move. No, not this one, not this one. Sorry. Let me adjust better so that you can see. Same trade setup. So as I was saying, guys, this was my setup on Thursday on Audi JPY. Mind you, I'll overlay the trade I caught, the sell trade. So let's break it down. So as I've told you, but this one has more context. That's why you won't understand what the yellow lines are. So just stay with me on the cycles. I've named them here for easier for you guys to see. So my cycles are there, and we had remember, Audi JPY closely correlates with NSD JPY. So I always look for SMT. So we had SMT here on the standard deviation of between -1 and -2, actually the -2 area standard deviation. There we had SMT. So I was like, okay, that's first good sign, and we're in a premium area. That's the most important thing. We're in a premium area. And then we also had SMT here with NSD JPY. So when this one was making a high, NSD JPY was making a low. So it was a high and a low. So we were below midnight opening price. And on my cycle here, let's use the same concept I've just told you. If I take the same fib and overlay it between my two cycles, there. There. Okay, when do you see this move happen? The move happens between the 0.47 and 0.67 area. So that's when, and imagine it was after news, because I think news came out at 30 here. News came out at 30, was a manipulation to the upside to reach this area where they're sellers. Okay, this is a standard deviation. I think I've talked about it in my ICT macro videos, that if price doesn't close above it, target the low side. Okay, I think I've explained it in my ICT macro videos. You can check on my channel. So we get to see prices on news. CPI came, prices moved higher above this area, this first standard deviation of this area. This one is quarterly theory. So prices moved higher into this area, but the candles didn't, when you look, this is on the 5 minute, if you look on the 15, it's just a week. So prices didn't close above, so that was the manipulation. Targeting, you target any area below this area when that happens. So, and mind you, there was also a week down, but this week didn't push above. Anyways, let me just continue with what I'm saying. So this was the manipulation before the move down, and you see it happened. It didn't happen here. It had to happen between the 0.47 and 0.67 area. I think I'll go in depth into this strategy one day, but normally when I don't have swing trades, or this is what I do, this is what I look at. You get to see this DTCC midpoint acted as a support here, pushed prices higher. The same thing I showed you with the Great British Pound USD, the DTCC acting as a resistance, the midpoint. So I think I'll go deeper in this strategy some other time. Just let me give you the weekly analysis and let's call it a day. But when I'm scalping, I try understand the algorithm. Okay, so yeah, everybody has their own model, and yeah, I'll explain what I think the algorithm does, because for me, I've seen this is very accurate move. They'll wait for a specific time period to push price within that time period, even if news has come out. So yeah, I'll try and make a video on that ICT macro video too. Otherwise, let's jump into it. Let's go to EurUsd. No, to gold. To gold. What's happening with gold? You guys love gold. I love gold, and oh, we're on the 5 minutes. Let's go on the 1 hour. Seriously, how can I be trading on the 5 minutes on gold? So let's do this. So last week, where were we? We were up here. Told you guys wait for a retrace to the downside. After a retrace to the downside, wait for a push to the move to the upside. I told you guys we are making take profits. We made take profit 1 there, we made take profit 2 there, take profit 3, and we said the exterior, the what is it called, external liquidity will be an extreme target, so can act like take profit 4. We got to see prices hit the first 2 take profits, which is very good, and we get to see prices actually respected the take profit 2 area to the tick. Why? Because we were using confluences on this other area to formulate this take profits. We weren't just making them out of the blues, if you remember. So what's happening with gold and what do I expect? So here, this purple area, it's a fair value gap. We get to see it was formed here. Prices have gone and closed above the fair value, the fair value gap. And I told you guys we'll be targeting the upside, because remember, gold didn't come and take this low. If you, the first trade, you know, market structure, right? Market structure. So this is what happened. This low, the C wave here, I've always been talking about it in every video, is, let's say, this type of low. Markets came down almost there but didn't take. You see, respected it and continued with the structure. So this area is this area, so we target the external range liquidity, any high, the highest high of which will be this high. So prices are moving from internal range liquidity to external. That's how prices moving from external to internal range areas. So we are moving from this internal range area to external. Okay, so how will we formulate a trade? How can we, if I didn't catch a trade, Chris, how will I catch a trade? So let's move to the 1 hour time frame. The inverse this fair value gap, as prices have held above. Okay, so what you can do, let's say on the 4 hour, on the 4 hour time frame, there is this down close candle here. That can be our order block. So we can wait maybe for prices to retrace into this area, and then we can buy, targeting now this high. We can be, you know, the first high you can target. You know, you target the low lying fruits. Okay, so that can be the easiest fast take profit. So let's say you formulate a trade like no, not short, I want to go long. Let's say order block, target stop loss maybe there, but I'll formulate a stop loss because that stop loss is too big for me. Target the first high there. That's not good for my risk management 1-to-1, but I can target there, and I can target the external range area. And if this setup happens to fail, or let's say prices go above and just come down below, and let's say maybe, we'll see, I'll have a second setup. I'll have a Wyckoff type of setup if that were to happen, but I don't want to get into that to confuse you guys right now. I just want you to have this picture clear right now. So the picture is, this fair value gap, prices have closed above, so we have a down close candle. That's our order block, and we can continue buying from there. I'll overlay the trades. I added actually more positions, but I'm still holding my original positions on this pair. So yeah, very good trade, very good pair. I understand this pair inside and out. Every move it makes, I understand it. Okay, so that's why you see a lot of complex analysis, but I've always broken it down, and we've always analyzed and added to our analysis every time. So yeah, that's my analysis on gold. I have so much more analysis videos, guys, on EurUsd, Euro, Great British Pound, but if I add them to this video, it will make it too long and it discourages people from watching. And currently I don't have a huge, you know, fan base on which people can watch. If I was to have like 1,000 subscribers, by the way, this week, congratulations, I reached 100 subscribers. So if I have like 1,000, 10,000, you see, even if I make a 1 hour long video, people will watch. Okay, but for now I just have to make videos on the crucial pairs people trade: gold, euro, Great British Pound. I can just break down a few, like silver. What's happening with silver? So silver, last week, guys, I told you what to expect from silver. Told you guys to expect a retrace to the downside, take a trade from there, target the buy side liquidity. What happened? We hit it. You see, trading is that simple. You don't need to overcomplicate it. It might be a bit hard in terms of risk management, or if you have, you know, small capital, but when you're confident and you have good amount, prop farm amount or personal money account, you can trade. You can do wonders with trading. So currently this candle is the one I formed like a area there, and it's holding price well. So let's see on silver what will happen, because if the dollar is to still go down, I expect this one to at least continue pushing higher, because remember, inverse relationship. So if you can formulate a trade somewhere here, well and good. Let's move to Great British Pound, USD CHF. So what's happening with this my pair? So after months of trading this pair, what's happening now? So currently I told you guys that we might, bias might have changed. Before, the bias was we long to the upside, okay, but now markets are showing signs of selling, and we get to see order flow is bearish currently. And this week you can maybe wait for a retrace to this area, maybe because there's liquidity above, and then push down. So remember, if you don't see liquidity, you're the liquidity. Okay, so in any trade setup, try identify where the liquidity is, which will be taken before a move is made. So yeah, that's my advice. So there's liquidity there, so maybe a push to the upside, then continuation. Here there's this fair value gap that's I think is an inverse fair value gap. So I've just marked it out because I know some people will be longing here. I know, so we might see some reaction, maybe to the upside. It might continue, it might not, but I'll keep my eyes on it. That's my simple analysis on USD CHF. Let's go to NSD USD. Just a quick recap, see what's going on. Last week we were here, told you guys I didn't like this trade because the order block has now been violated, this sell order block, but I know they were collecting liquidity because remember, a lot of stop loss, retail stop loss are always just above there. So we just wicked, collected that and pushed aggressively to the downside, but my entry area is still this area. So let's see how it plays out. If USD keeps on falling, this one will keep on going up because inverse relationship, right? So let's see how it goes, but I'll be looking for a trade setup, as I told you, within this area. I'll try make my stop loss as small as possible. I won't just have a pending order, enter the trade immediately and stop loss here. That's not what I do. I just do this to represent the markout for you guys. So I believe that's it, guys. If you want me to analyze any pair come next week for you guys, always comment on any video, any pair you want, be it currency, be it stock, be it anything crypto. I'll always analyze it for you because that's always my promise. And I have a lot of Euro CAD, Great British Pound trades, SMC though, types of trade, not powerful trades or anything, but it's good to have an eye on them. But if I add them here, like I've said, the video will become longer. That's not what I want. So I hope you guys will use the setups I've given you, or it will help you have a clear bias for the week. In case of anything, I'll update you guys. I'll always make a video. I'll overlay all the trades currently here on the side. You'll get to see them, but I already showed them in the beginning of the video. So yeah, you guys have a wonderful week, blessed week, and cheers.